we've seen things in the mainstream press, Elijah, we haven't seen in years. Forecasting to let's say, the mainstream players, that silver is actually looking very, very good, not only here, but for the foreseeable future.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for August 14th through August 21st, 2023, while supplies last. This week we feature Silver Buffalo rounds at just $2.50 over spot. The Silver Buffalo is made by various private mints across the U.S., with a design based on James Earl Fraser's iconic Buffalo nickel. They are highly recognizable and one of the most trusted types of bullion rounds available. These 3/9 fine rounds come 22 a tube and 500 to a box. And at just $2.50 over spot, they offer unparalleled liquidity at a price lower than many high-volume bars. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan, the Silver Guru from themorganreport.com. David, thank you so much for joining us today.
Elijah, it's always a pleasure. Thank you.
Well, it's great to have you. I wanted to get an update on silver and gold today. I know that we're seeing a bit of a pullback these last couple weeks, gold being below 1900 and silver obviously below 23. I'm hearing that the banks are actually reducing their short positions this time, which might be a bit of good news, but your take.
Yeah, well, for gold, we were above 1960 about the end of July, and here we are midway through August. So as you said, 2 weeks, we've gone from 1960 to under 1900. Clearly a downtrend in the last 2 weeks, and this is not surprising. The seasonality of gold is the lows are almost always hit in August. Is the seasonality perfect? No, but it's more often than not. Silver and gold track together. I don't think the correlation is still 85%. I don't think it's quite that high, but it's still very high. And silver, very similar from the end of July at 24.50. We're at 22.50. What's interesting on silver, as you said, is it actually went below 22.50 and now it's above it. And so, it's debatable. I've said for years that the whites lead the yellow, and at times they do. And at other times gold leads. So I've changed my mind on that. When I first started trading futures, my broker it was my third broker, and he was very, very good. And he's one that taught me that white leads the yellow. And again, at that time in the 70s and 80s, that was pretty much true. Coming back on point, the commitment of traders looks as bullish as it has in a very, very long time. As you outline, the banks that are almost always net short are actually net long, and that just happens very rarely. So the setup is certainly suggesting a rally here. Problem with the COT that I've discovered over years is that the trend change is usually forecast by the commitment traders, but it's not very good at timing. In other words, we know this is taking place, and people might expect it to be tomorrow or within a week. Sometimes it is, but oftentimes it's delayed. However, I will stick my neck out, as I've done many times. I really think it's close. In other words, I think silver will bottom first. It looks like it has, but we need more days of trading to be sure. And I think the commitment of traders is highly suggestive of what we've seen in the mainstream press. I know I'm rambling on, but we've seen things in the mainstream press, Elijah, we haven't seen in years. And that is where the mainstream says things like silver is a tighter market and could be tight for a long time. That's not the exact quote, but that was the inference. And that was from a mainstream. And we've seen other columns like that. And this is sort of forecasting to, let's say, the mainstream players that silver is actually looking very, very good, not only here, but for the foreseeable future. And that's a true statement. The only thing that's lacking in the silver market isn't retail demand, although that's slackened off somewhat by the premiums. We know that. Certainly, industrial demand continues to grow, but it's the institutional investor that's absent this market. And that's rather interesting because normally on a $2 move that we saw a couple months back, where we went from basically the present level we're at to 25, that rally is the type of rally that the algorithms will point out to the trading funds, to money managers, to institutions, and they'll take advantage of it. Some did, but not to the level I would expect. So there's something in my view that's taking place that I really can't explain, and that is, why is there very little or less than average in institutional investment? It could just be the summer doldrums. It could be that simple that, during August, most Europeans take these very long vacations and are not in the market. That's part of it. But it could be that simple, or it may be something else.
Your take on, I guess, where we go towards the end of the year, if the banks are betting that, prices are going to go up, it seems like, they're very, very seldom wrong.
Right. Well, one of the best places to follow me, if you're so inclined, would be my Twitter account @SilverGuru22. And by the way, I've had massive problems with my Twitter, eBay, and a few other things. I was hacked severely a few days ago, and it's taken till today to get everything straightened out. But regardless of that, I tweeted out, I think Thursday or few days ago, that I expect to see a pullback in the stock market in October of enough significance that it'll affect all markets, which means gold will go down as well as everything else. And I equated it to the 2008 financial crisis. And even the mainstream press calls it a financial crisis, and it truly was. And in that crisis, gold lost about 30%, which was a lower percentage than almost everything else. Housing, stocks, the bond market held up. But I think I'm not going to see an exact repeat of that, but I do think we're going to see some weakness. The stock market really works in a very simple manner. And I know that sounds insane with, all the variables that go into stock selection in companies, how they ebb and flow. But one of the best books I have, and I think I gave it away, it's not back here anymore, but it talked about how the stock market really works. And how it works is there's a flat line called the accumulation phase. And this is where the insiders or the managed money, people in the know, buy. And they buy slowly over time to not move the market. So it goes basically horizontal. That's the accumulation phase. Then it goes up. That's called the markup. And now they want to sell it all at a high price. So to sell at a high price, it's just like the accumulation phase. It's called the distribution phase. And the distribution goes flat line near the top. And this is an idealized curve. I'm sure people understand that. But you can't sell a big whack of it or it'll drive the price down. So you have to filter out slowly over time and sell it from strong hands into weak hands. And we've been in a distribution pattern for the overall stock market for a long time. It's only about 5 or 6 stocks that are actually keeping it up. But if you really know how to study the market, I'm a market student, still learning more, certainly don't know it all. But I do know enough to tell you what I'm about to say, and that is you only have to manipulate a few major stocks in order to make the index look good. And if you look at the overall market, it's actually pretty weak. So I do expect, am I right about October? Again, it's a seasonality, Elijah. The seasonality in gold is August. Is it always true? No. The seasonality for the stock market is October. Is it always true? No. But your question, the end of the year, I fully expect to see the metals do much better by the end of the year. I think there's going to be an event or multiple events that start to shift the perception of the average investor, maybe out of stocks or lightening up their stock position, or at least not adding to it, and moving more into the precious metals. And we've already seen that by the banks, and the banks are the smart money. We've seen massive buying by the banks that we haven't seen in years, and that's the beginning of the run to gold. So I'm pretty confident in what I'm saying. The problem is for most investors that have been in this market for the last decade is they've seen it do a round trip, 2000 and 2011 to 2000 today, and it made a big U, and they're frustrated. People that bought at the top, it's back to where it was, holding on for 10, 11, 12 years, and it's only even. It's not very good. And the stocks have not done as well. The stocks are underperforming the metal in most cases. There are exceptions. We have a couple of them in the Morgan report, but that doesn't mean you should give up. In fact, the market will exploit any weakness you have. So if you're impatient or you've held a long time, you'll sell out before the big move. And then if you are let's say, confident of your ability to buy the pullback never comes. You never get back in. So the idea that, Bill Murphy and others say you've got to be in it to win it, which means you buy the right amount. Just look at it as a core position. You don't get obsessed about market price every day or even every week. Maybe look at it once a month, or just look at it like, look, I've got some precious metals. So regardless of what happens overall, I know I'm protected in the worst case scenario. And there's a lot of ways to look at it. Obviously, I'm overweighted in precious metals. That's my specialty. And I'm not afraid to take a profit either. I do trade within the realm, but I always have my core position that I don't touch.
You mentioned how you see things getting worse going into the end of the year, which will push precious metals up. Are there any particular events you're looking for? I know we had some bank issues at the beginning of the year here. Some people are expecting more. What is your take?
Number one, banking crisis. Number two, some type of cyber attack. Number three, the 10-year is just broken out. So I think you're going to see something else in the bond market. So I think it'll be a synergistic effect. It won't be on the same day, but I think you'll see too much, more concern about the banking sector, much more concern about the debt markets, and that will spill over into commercial real estate and into the overall equity market, which means where do you go? And basically, if real estate isn't doing well and bond market isn't doing well and the stock market is falling, there's really not many places to go. And the one place to go is either cryptocurrencies and or the precious metals. And the precious metals stocks, as I said, I think bears repeating, are so undervalued relative to metal. They never had this big a discrepancy. So if you're a value investor and you're looking for something dirt cheap, take a look at the underlying mining equities and pick the best of the best. That you can do on your own, or you can get some help with someone like me that basically works with the equity side, although we look at everything, bonds, the dollar, foreign currencies, housing market, you name it. But primarily we focus on the resource sector. And right now it's mainly the story is gold, silver. We have some couple of uranium picks and technology stock or two. And we started in a new section, Elijah, where it's kind of the better of the speculative side, which is junior producers. These are companies that are actually producing. So we know they're viable. Or maybe they aren't. Maybe their production cost is $25 the ounce, and at $22.50 they're losing some money, but they can hang in there. They've got exploration upside, and they also have price upside. And since they are small companies, they have a pretty good bang for the buck. But you got to know what you're doing in the speculative side, because a lot of people lose money because a lot of these small companies just run out of money and they can't explore anymore, and it's game over. So you got to be careful. That's why we diversify. Big money goes into big companies, mid money and mid companies. And speculate with money you can afford to lose. So.
When it comes to investing in precious metals, a lot of people out there are looking at events around the world, especially the BRICS summit coming up this next week. I know last time we had you on, you had said that you are kind of skeptical about what this will really mean about a gold-backed currency. Are they actually serious about this? Do you see this having any impact on the metals markets?
It could. I wrote the editorial about it, and I'm going to follow up again next month because things change and no one knows for certain. But to me, it's, show me, don't tell me. As far as I can tell, the August 22nd meeting is going to be talking about it. I don't think it'll be implemented, or if it is, it'll be implemented in a very small way. But the idea is important. And the problem with it as it stands currently is it's not convertible. You can't directly convert the BRICS to gold directly, but you can indirectly. And so there's meaningful thought around it. I don't think that it's going to have as big an impact as many others have written about, but it could over time. But the initial thrust could probably move the metals markets on what I'll call knee-jerk reaction, and then it settles down within a few days or a week or so. Once that's established, we got to watch it more carefully to see, again, if they actually implement something. Problem is that the debt problem is a US dollar problem. It's not a BRICS currency problem. And so no matter what happens with the BRICS, the debt owed by all these foreign nations are still dollars, which means they've got to go to the foreign exchange markets and convert to dollars in order to pay off the debt. Now, the main thrust of the BRICS isn't so much gold or gold backing. What it really is using foreign currency as final settlement. So I can settle with Brazil with their currency. I can settle with India with their currency. I can settle with Russia with their currency. That means you don't have to convert to the dollar to buy oil, as one example. And that's very powerful. So I think that's the main thing to think about coming out with this announcement that's supposedly or probably will take place on the 22nd of August. And that carries more weight than a gold-backed currency that's not convertible.
I think, yeah, introducing gold back into the conversation is very powerful. Do you think this will make other countries start to think about that as well, and also maybe have a negative impact on the US dollar?
Yeah, it goes back to the, show me, don't tell me. Because if you follow the gold trade, which you do and I do, you see even these small countries are buying for them massive amounts of gold and put it in their own vaults. You're seeing gold recalled from, the Fed or the United States to repatriate their gold to their own country. So if you just see what's actually happening rather than what's said, it's very clear that a lot of companies are basically getting their hands on, I'll say, as much gold as they can. That's probably an exaggeration, but it's obvious that these countries are moving into the gold market. So certainly it has a big impact. And, whether you could trade in gold through the BRICS currency or not, right now, no. If you could in the future, that would certainly have a big impact. But there's no doubt in my mind that the run to gold started. It's just started with the banking system. It hasn't really spilled over into the institutions. I'm talking about your pension funds, managed money, your major commercial banks, even your money center banks. I mean, it's only the bullion banks or banks that are associated with their balance sheet looking at gold as a tier one asset that happened with this Basel agreement that are really concerned about gold. The gold trade is actually diminished from the banking side basis, the gold trading desks. A lot of those just disappeared because the requirement under the Basel agreement was cumbersome enough to say, you know what, we're only making 2% of our bottom line trading gold. Get rid of it. Get rid of it. We don't need that kind of hassle for a 2% increase on our balance sheet. So it's a consolidation of the gold market. And I think that trend will continue. But there's a lot going on behind the scenes that most people are not cognizant of because they don't know where to look or whatever. So they rely on, shows like yours to really understand that even though gold is going nowhere, you might call it another accumulation phase at a higher level before the powers that be do the markup.
It is interesting to kind of look at it in that respect, because I know there was a lot of buying. It seemed like, in the low 1600s, whenever it went down there, it always came back up. So I think if you're saying this is a similar situation, well, that might definitely be a good sign for times ahead for the metals.
Absolutely. As I said, I'm a market student. I don't get it right all the time, but better than most. That's why I'm successful. I don't expect to win everything I buy. I don't expect to not take a loss. But, I manage my portfolio professionally. And that's, what the Morgan Report's all about. You basically get to look over my shoulder and see how I invest and what I invest in. And I don't give the dollar amounts, but I give the percentages. Because, if you've got a $100,000 portfolio or $1 million, it's only it's a 10 factor. But it's the allocation that you need to pay attention to. For an example, one of my favorite royalty companies, when gold was at an all-time high in September of 2011, that company was at 50 and now it's 150. But gold's made a round trip, as I said earlier. So would you rather have gold at $6,000 an ounce instead of $2,000 an ounce? Well, if you own that stock, that's basically what's taking place. So you can outperform gold with the stocks if and only if you pick the right companies.
All right. And people can follow you on themorganreport.com. Can you tell us a bit about that and any other place people can find you?
Sure. I think Twitter is the best place to follow me if you just want to look over, see what I'm thinking, because I post like Web 1.0, where I used to get up dark 30 real early in the morning, and I'd go through all the news and I'd find the ones I like and I'd change the headlines so it would fit on my website, and I'd post these news items. Now I just basically click Twitter and do it very quickly and I do it throughout the day because it's so easy. As far as the morganreport.com, there's a free service, so sign up. I've got something in work that I believe will manifest, which is very competitive price on the retail side. And I'll put that out to my paid subscribers as well as the free list. And then there is a paid service, which you can go to the subscribe tab and read about. There's a video, which I really need to update. And it outlines what we do, what you get. And there's a money back guarantee as well. So we're always looking for new members, but we enjoy our free membership as well. And I enjoy doing programs like this. It's always fun. And off air, we were talking for the audience of when I met you. It's been many years ago, and it's just been fun to watch you grow. And I'm glad you're still in the sector. I think you're a very meaningful voice for those that need to gather information about gold and silver markets as well as the general economy.
Fantastic. Well, thank you for that, David. And we really appreciate your work, and where people can find you. We'll put that in the link in the description of this video so people can find more there. Once again, thank you so much for your time, and God bless.
God bless you. Thank you.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.